Alright, let's take a look at the global indexes for the week uh, of ending the 11th of November. So as predicted a few weeks back, okay, there's a technical rebound of the long-term uh, support line for quite a number of indexes, including the Dow Jones Industrial Average. And then with the much lower CPI uh, for announced this week, okay, there was a big uptick in the Dow Jones. What to look out for is that the Dow Jones industrial average has actually reached this support line over here around 33,770. Right, so um, if it breaks above this, okay, the short-term resistance line, okay, I will call it a short-term resistance line, then do watch out for the top, okay, established in back in the January, right? But if it pulls back, okay, then what might possibly happen is yeah, there's two scenario. It could be testing the 29,920 um, support line, okay, and thus forming the right side of the uh, inverse head and shoulder. Okay, this spells some bullishness in the Dow Jones Industrial Average. But if it does falls back to this and test the long-term support line, then to watch out for uh, bigger down drop in the Dow Jones Industrial Average going forward. So yeah, um, the next few weeks to look out for this 33,740 line support resistance line. So if it breaks through, then uh, uh, just be cautious, okay, in trading, even though it looks bullish. Now, as for the S&P 500 and the Nasdaq, okay, let's look at the Nasdaq. Now, Nasdaq bounces off this support line over here. Now, but however, with the still rising interest rate, okay, it doesn't spells good news for the Nasdaq. So while it has rebounded quite a bit, okay, a technical rebound, I must say, it is still not showing any major movement up on top. So do be careful in terms of trading the Nasdaq. For S&P 500, it's the same thing, right? The interest rate, rising interest rate, doesn't means too much for although, okay, what happens is that it breaks it breaks the low over here, it breaks above the low over here. So it's kind of suggesting that it's trying to some big players is trying to wash out the best. Okay, but I would be cautious about trading the S&P 500 at this point in time because it's not clear what the where the momentum is. Right, for Europe, there's actually not much to look at this point in time. Okay, the French CAC 40 has reached this resistance line over here. Okay. Um, so if it breaks above this, then well, just watch out for the top back in the uh, in on the last day of the 2021. Okay. Um, as for the FTSE 100, nothing. The direction isn't very clear cut. So yes, after as soon as I became the prime minister, there's a little bit of upside down there, but basically it's range bound. Okay, so I wouldn't suggest doing much with the FTSE 100. Now going into Asia, okay, let's look at the um, Nikkei 225. Okay, the Nikkei 225 is still range bound. Okay, um, there's a bit of the upside, mainly because of the um, some weaknesses in the US dollar versus the Japanese yen. Okay, okay, this over here is a false breakout, okay, onto the upside. So the worry down here is that although there's some upsides, but it looks like there's a head and shoulder from being formed. Okay, so looking at the Hang Seng, okay, Hang Seng shows some sign of it actually closes above the long-term support line, right? So kind of suggests that there's some kind of false breakdown over here. Alright, so there might be some, the way I see is that there might be possibly some further upside over here, especially when it actually breaks above the this long-term support resistance line with a pretty good volume. So um, still, I'm seeing some bullishness in the Hang Seng itself. Okay. Well, on the mainland China side, with um, the new COVID policies, it actually did a rebound of the long-term support and resistance line over here. So again, I'm seeing some further upside in the Chinese stock, but it is not going to be a bull market. So if anyone is trying to trade the Shanghai Stock Exchange, then probably nibbling it would be better if you're bullish. As for the Korean stock market, okay, you can see that it's following the general global trend where it actually bounces off the support resistance line pretty strongly. Um, and we'll have to see if it actually breaks through this short-term resistance line over here. If it does break through, then well and good. Then that means the bearish market has kind of reversed. But if it bounces back off, then just hang on a little bit because it might be still quite a while before you see some further upward movement. As for the Singapore Stock Exchange, the Straits Times Index is behaving quite similarly, as in it bounced off the this support resistance line over here. Okay, and in terms of volume, although it's not that great, but it's still pretty stable. So, but going forward, just be more nimble with the Singapore stock market. Okay, as if once it reaches this, then if anybody wants to take profit, then by all means go ahead and take profits from it once you hit this, but roughly about the 3,300 lines. Okay, that's it for the stock analysis for uh, the global stock indices analysis for the week of 11th of November.